The step up in basis refers to the fact that when a owner, especially someone who owns the property a long time, their basis is what they paid for the property, basically. So if they bought it 30 years ago, that's way less than what the fair market value is. So when that person passes away and leaves it to their heir, they receive a step up in basis. So the person who inherits that property, now it's as if they purchased it at that new higher level. Let's say that's $3 million instead of the previous 500,000 that it was purchased for. So this is great because then there's no tax due on that difference. As if this owner had sold it, he would have to pay tax on $2.5 million of that difference on a capital gains tax rate. However, this new stepped up basis then accounts for the valuation when it is factored whether the heirs actually have to pay taxes, inheritance tax on the value of what they inherit. So now, even though the federal the federal exemption is pretty high, and a lot of people might fall out of that, they'll be aware that there's still state inheritance taxes that may be due when you receive real estate, and those thresholds are usually much lower than the federal basis. So it's not like that property is just going to be tax free. So just be aware and watch out for that step up in tax basis.